You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports. We connect the dots so you know the actions you can take. How your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. Let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we're celebrating today. We celebrate every day on Ron Siegel Radio. There's a lot to celebrate today. Wow. Let's see. World Lung Cancer Day. Not pleasant. Minority Donor Awareness Day. My mother-in-law used to love this one. International Mahjong Day. Child-Free Day. I used to have a sound bite on here that said yippee. I don't know. It should be on here somewhere, but Respect for Parents Day. World Scout Scarf Day. National Night Out Day. Yeah, we got to respect our police officers. Love that one. And having beaten anorexia, you know that I'm going with National Raspberry Cream Pie Day. Where do you go for raspberry cream pie? Polly's Pies, they're the ones. That's my go-to. Let's take a look and see what the markets are doing today. It's not a whole lot going on in the markets right now. Dow Jones Industrial Average, up 11 points. The S&P's down 16. The NASDAQ's down 67. Oil's down a little bit today. That's a surprise. That hasn't been happening very often. We're constantly watching oil prices go up. 378 is the national average for a gallon of gasoline right now. Should we look at what's going on in the formerly Golden State? I don't think we want to even know what gasoline prices are doing here in California. $5.01 a gallon. Ow! Still going up. I think we've been going up for about over a week now. A month ago it was $4.83. Last year, $5.60. So president will tell us that gas prices have come down 10%, even though he's tripled them basically or doubled them since he got into office. We've even taken over above the price in Washington with their cap and trade prices. Josh, you finally went over $4 and you got out of the 420s. You're $4.31 now in Nevada. $3.84 Arizona, Colorado $3.96, and Louisiana $3.39. So the gas prices, not our friend. And who knew with all of the attacks that we're getting from the administration, no one would expect that gas prices would do very good. You just have an administration that's saying, something, we're going to attack the American economy. I know people are saying Bidenomics is working and how great things are. Don't tell that to 30,000 people at Yellow Freight. I think they just go by Yellow now because they picked up Roadway Express and a few others, but third largest less than truckload carrier. So they've laid off 30,000 people. Another company I just heard this morning on the way to the studio laid off 5,000. That's CVS. 5,000 corporate jobs at CVS. They're not hitting the tapes yet, but they will. Eventually, we'll start seeing that. We got the job openings and labor transition report came out today. So we are watching all these different reports, seeing where the problems are. Well, there's a lot of problems in our economy. 9.616 million units. 9.61 was the expectations, lower than last month's revised. So we have the report, I shouldn't say that we expected 9.61. We got 9.582 for the month of June. And we did get a revision for the prior month to 9.616. So the numbers there not looking good on the job openings. Well, and we'll see. Might take a couple weeks until we start seeing the unemployment numbers. Now, I used to be in the import-export business, so I did a lot of business at one time with Yellow Freight. And it's really a shame. Now, I'm not a big union guy anymore. In the early days of unions, they had a great place there in protecting the workers. I think it promotes a lot of mediocrity. You don't get paid to excel in the unions because everybody gets paid the same things. It's all a scale wage. So it bothers me in that instant, in that sense. But my point here is 30,000 people that went to work every day, some of them for many, many years, and now they've got no job. How they manage this one, I'm seeing reports that their pension fund might be in jeopardy. I don't know how they managed to have the pension fund in jeopardy as well. Generally, that's a separate fund, separate entity in essence. So that one there, you got to feel bad for all these folks who work their whole life, work hard. Used to be, in the LTL world, trucking is still a hard job. Truckload world, not so much. So just watching some of these things. I got a problem, though, and I'm going to share my problem with you. I don't know if anybody else feels this way. I see that, the women's soccer, women's World Cup just barely won. And Megan Rapinoe.
Such an idiot.
Yeah.
Such an idiot.
So dropping an F-bomb. Doesn't bother. I generally am a U.S. honk. I'll root for anything where it's a international competition. Women's soccer wouldn't bother me if they lost. I'm not a big soccer fan anyway, but I don't know why we even have them representing the United States. They don't want to be in the United States. They're not fans of the United States. They're not proponents of the United States. They're not ambassadors of the United States. Why would they represent? We can't find anybody better than these morons to represent our country. I just throw that out there. I'd love to see what your opinion is on this. Am I all wet? Am I missing something here? Why would I want to support these people when they really don't want to be supporting the U.S.? Just throw that out there. Tell me your thoughts. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, having a little technical difficulty here getting this on my report. Sellers don't want these two things, or don't let these two things hold you back. Home buyers are still more active than usual. How cash-only spending affects your FICO scores. What do VA home loans cover? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You got a phone? Make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. We don't know APR. We don't know points paid or received. We just know the actual locked rates with consumers across 42% of all mortgage transactions nationwide. 30-year conforming, 6.881. We've got the 30-year jumbo, 7.052. That was down quite a bit yesterday. 30-year FHA, 6.784. 30-year USDA, 7.69. Best loan on the market. It was pretty flat yesterday, 6.619. That would be the 30-year VA loan. What's driving the market? Waiting time. That's what's driving. It's just a matter of waiting. Everything right now is just about waiting to see what the markets are going to do, where we're going to head with the jobs reports that come out later this week. 10-year Treasury up 9 basis points, 4.037. S&P 500 is down 15.49. Mortgage-backed securities are down 6. Why? Well, you got a lot of data, a little bit of, not a lot, I would say some data coming out, not the important stuff. So you've got the SLOOS survey, Senior Loan Officer Opinion Survey for July 2023, showed that there were tighter lending standards and weaker demand loans. Clearly a credit crunch that has not only been ongoing, but appears to be accelerating. All types of loans, including business loans, home loans, HELOCs, and car loans, were down in volume, and banks are expecting to tighten lending standards further over the remainder of 2023. Why do you think that would be? Because they're expecting a recession. There is certainly a bifurcated market. Some areas of the economy are holding up, while others are feeling the pinch and slowing considerably. We'll see how it impacts the labor market coming up later this week. We've talked about that. If we see slower job growth, it could be just the catalyst we need in the bond market to help rates move lower, although it will not be captured in this week's reports. 30,000 layoffs at Yellow Freight or Yellow Trucking, whatever they're calling themselves. 5,000 layoffs from CVS announced today. Certainly going to be a drag on the job growth in the upcoming reports. CoreLogic, now that's actually some good news right there. CoreLogic reported that home prices rose 0.5% in June after rising 0.9% in May. Home values are now up 1.6% year over year. CoreLogic forecasts that home prices will rise again in July by 0.6, rise by 4.3% over the next 12 months. Based on the gains seen in the first half of the year, the CoreLogic report is on pace for just under 10% appreciation in 2023, but they're forecasting 7% full year appreciation. Chapman University, do you hear that? They're talking about houses, not median prices, going up. The values are going up still. And we're going to keep watching that because more and more companies are coming up telling us that the markets are doing well. The real estate market, is it doing well because prices are because of the natural progression, or is it just a supply and demand issue? People are still wanting houses. They're wanting to buy homes, and there's no supply. So CoreLogic, they're on pace, as I said, 10% appreciation. I think that's too hot. Not that I'm saying they're wrong. I'm just saying that we have to be careful. When home prices appreciate that much, it's just going up too much too fast. And just as we've been telling you that the Fed is looking at old data for shelter costs, well, you know something, these are starting to show the numbers are accelerating. So are we going to have higher inflation data the first of next year, which is going to then push the Federal Reserve to take those numbers higher? Just throwing that out there. It's a curious question. Morning, Jay. Glad to see you here. So it's just a question I'm throwing out there because we keep thinking about the Federal Reserve having to drop interest rates. Well, if they drop the interest rates, then we're going to see more and more people are going to come into the market. They're going to be ready to sell. We're going to have more, the affordability numbers will get better. So the question is going to be, now the other flip side of that is if people can't get a loan, what are they going to do? Now, there's plenty of money out there, but the lending standards are starting to tighten. What does that mean? Well, it means you may start seeing that some of the more exotic, non-traditional loan products might just go away. You're not going to see a change in the Fannie, Freddie, FHA, VA, USDA. Those programs are going to be out there. You might see a little bit of heavier overlays on some of them, but the bank statement loans, the 1099 loans, some of those, what they call non-QM, I call them more exotic loans. That's what we might see a little bit more challenges in, or a little tighter. You see a company like Yellow Freight that pretty much is, well, they stopped operations. And you might say, well, why did their stock prices jump up so much yesterday, Ron? The liquidation value. So that's the answer to that question. But here's the bottom line. One of the things that they cited was they couldn't restructure their debt. We're going to see that in a lot of businesses, a lot of companies, a lot of commercial real estate. That's going to be coming up. Why? Because the vast majority, we don't think about this when we're talking about home loans. When we talk about home loans, we're looking in this country, 30-year fixed rate loans. That's the loan most people are using. In business, frequently they're using a 5-year loan that's amortized over 25 or 30 years. So what does that mean? Well, it means it has to be rewritten every 5 years. Now, that means they have to go and look at what the current market rate is. So early last year, if somebody refinanced or did a loan early last year, okay, they've got a 5-year window. Anytime beyond that is obviously less of a window, and we know that interest rates have gone up dramatically. So someone may have a 4 or 5% or 6% business loan, and now they're looking at a 9 or 10 or 11% business loan. Big issues right there. Maybe they can get it, but then they have to start increasing their pricing, which is inflationary. Or worse yet, if they can't restructure, like Yellow that happened, they close up. And that gives us an issue with the labor market. So a lot to be looking at right there. We're watching all of it. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You make the call, 800-306-1990, 800-306-1990. Let's take a look at a Borrow Smart segment today. And I want to talk Borrow Smart, brought to you by rsrstudentloanhelp.com, rsrstudentloanhelp.com. Once again, the president is trying to is using policy to try and circumvent what's pretty basic. Now, we've talked about this before. There are quite a few programs on the market right now to help with student loan debt. rsrstudentloanhelp.com, rsrstudentloanhelp.com. You can actually go right there and see what can be done for your student loans. But here's the issue that I want to get to. All of the policies that the president comes out and talks about, the Supreme Court has already said he does not have the authority to do. So why he doesn't just put a bill into Congress, he controls the Senate, and try and do it the right way, I don't know. But let's take a look at what the newest student loan policy is. Understanding the landscape, comprehensive look at new student loan policies. In the dynamic world of student loans, the winds of change have been blowing more intensely than before. The Biden administration has recently rolled out several policy shifts that directly impact borrowers. These changes span across debt relief measures, modification of income-driven repayment plans, and new pathways for default recovery. In this article, we're going to delve deeper into these changes, shedding light on what they entail and how they affect you. Debt relief, a beacon of hope for student loan borrowers. The White House has unveiled new actions aimed at extending much-needed debt relief and support to student loan borrowers. This move encapsulates substantial reforms of the Public Service Loan Forgiveness Program, that's PSLF program, improvements to the loan servicing system, and relief measures for defrauded borrowers. A pivotal aspect of these reforms is the PSLF program, which promises full loan forgiveness after 120 qualifying payments for individuals in public service roles. This change simplifies the previously convoluted program, providing tangible benefits to those dedicated to public service. We've got the income-driven repayment plans navigating the shifts. Biden administration has not just stopped at debt relief. Significant changes have also been introduced in the income-driven repayment plans. Borrowers will now experience a simplified income verification process, with the removal of the annual recertification requirement, offering them a reprieve from the often stressful recertification process. Moreover, the administration is taking a more lenient approach towards the tax liability on forgiven loans. This policy shift could prove beneficial for many borrowers, but understanding its implications on your broader financial picture is crucial. The removal of recertification might lead to higher monthly payments for some, especially those with increasing incomes. Changes in tax treatment on forgiven loans could also impact your overall tax planning. Default recovery, charting the course of financial stability for those grappling with student loan default. Hope is on the horizon. The new policies provide two main avenues for recovery: rehabilitation and consolidation. Rehabilitation allows for the removal of default status from your credit report after making 9 agreed-upon repayments over 10 months. It also restores your eligibility for federal student aid, providing a much-needed lifeline to borrowers. On the other hand, loan consolidation combines all federal student loans into a single loan, possibly with a lower interest rate, although it does not remove the default from your credit report, like rehabilitation. It simplifies loan management and paves the way for income-driven repayment plans. Bottom line, embracing the future with confidence. The landscape of student loans is evolving, with the new policies introducing both opportunities and challenges for borrowers. Regardless of whether you're a public servant seeking debt relief, a borrower navigating the ins and outs of income-driven repayment plans, or trying to escape the clutches of loan default, staying informed and seeking expert guidance is crucial. At rsrstudentloanhelp.com, we're dedicated to providing resources and assistance that'll help you traverse the often convoluted world of student loans. For more in-depth discussions on these changes and more, make sure you're listening to Ron Siegel Radio. On the 9th, we're going to have an expert come in and help talk to us for the entire hour. Financial stability may seem like a steep mountain to climb, but remember, you're not alone. Together, we can understand these policy changes, make informed decisions, and set a course that supports your financial goals and dreams. The journey to financial well-being is a marathon, not a sprint. Every step, no matter how small, brings you closer to the finish line. That is the Borrow Smart segment, brought to you by rsrstudentloanhelp.com, rsrstudentloanhelp.com. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we got another Borrow Smart segment for you. What do VA home loans cover? How cash-only spending affects your FICO score. And sellers, don't let these two things hold you back. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today. brought to you by rsrmoney.com. rsrmoney.com. Let's see, which should we do first? We've got two of them today. So let's take a look at sellers. Don't let these two things hold you back. Well, we'll give that one a shot. Many homeowners thinking about selling have two key things holding them back. That's feeling locked in by today's higher mortgage rates and worrying they won't be able to find something to buy while supply is so low. Let's dive into each challenge and give you some helpful advice on how to overcome these obstacles. Challenge number one, the reluctance to take on higher mortgage rates. According to the Federal Housing Finance Agency, the average interest rate for current homeowners with mortgages is less than 4%. Wow, that's pretty amazing when you think about it. Less than 4%. And if you're watching us on RonSiegelRadio.tv, any of our socials or the ABC News and Talk AM 1490 video feed, you're seeing a chart. Average mortgage rates is less than 4%. So it looks like, what is that, about 70.7? Something like that. 70.7% of the mortgages are at 4% or less. But today, the typical 30-year fixed-rate mortgage offered to buyers is closer to 7%. As a result, many homeowners are opting to stay put instead of moving to another home with a higher borrowing cost. This is a situation known as mortgage rate lock-in effect. Mortgage rate lock-in effect. Now, if you are a regular listener to Ron Siegel Radio, you've probably heard me do some segments about the death by 3% mortgage. Well, this one here, the chart shows you that a lot of folks are under 4%. Go to rsr3pctloan.com. rsr3pctloan.com. Like percentage, but pctloan.com. I actually went through a whole situation, a whole demonstration there of how that 3% loan is killing you, especially most people right now. rsr3pctloan.com. The advice, waiting may not pay off. While experts project mortgage rates will gradually fall this year as inflation cools, that doesn't necessarily mean you should wait to sell. Mortgage rates are notoriously hard to predict, and right now, home prices are back on the rise. If you move now, you'll at least beat the rising home prices when you buy your next home. And if experts are right and rates fall, you can always refinance later if that happens. Challenge number two, the fear of not finding something to buy. When so many homeowners are reluctant to take on a higher rate, fewer homes are going to come onto the market. That's going to keep inventory low. As Lawrence Yun, chief economist at the National Association of Realtors, NAR, explains, quote, inventory will remain tight in the coming months and even for the next couple of years. Some homeowners are unwilling to trade up or trade down after locking in historically low mortgage rates in recent years, unquote. Even though you know this limited housing supply helps your house stand out to eager buyers, it may also make you feel hesitant to sell because you don't want to struggle to find something to purchase. The advice, broaden your search. If you fear you won't be able to find your next home is the primary thing holding you back, remember to consider all your options. Look at all housing types, including condos, townhomes, and even newly built homes can help give you more to choose from. Plus, if you're able to work fully remote or hybrid, you may be able to consider areas you hadn't previously searched. If you can look further from your place of work, you may have more affordable options. And you may even want to talk to our friends over at Geneva Financial. If you've got a bunch of equity in the home you're in now, and you're saying, you know something, I could sell my house very easily. I've got a bunch of equity, but my worry is I'm not going to find a new house to buy. Well, our friends at Geneva have the solution. It's called their transition loan. Basically, what they're going to do is give you a new loan for your departing property, pay off your existing loan, give you a new loan there, take a look at your acquisition, and when you look at the two of those, as long as you fit within guidelines, they're going to give you the money to buy your new program, your new home. Now, when they give you the money to buy that new home, once you sell the departing property, well, then you start paying back on that loan, that lien. And then you go and you take a look and you say, okay, well, now I want to get a new, I want to get a new loan for my acquisition, but you've already got the property. So you're not having to worry about, being homeless. The beauty of that is you can then go to rsrsalesmax.com, rsrsalesmax.com, and take a look at the solutions we have to maximize the sale price of your departing property. Some of them will get your property sold within 3 or 4 weeks. Very, very quick at the maximum price. So we like looking at both of those. Very quick, maximum price, rsrsalesmax.com. So giving you a lot of different solutions here to try and help solve different problems that we're looking at. Bottom line, instead of focusing on the challenges, focus on what you can control. Give me a call at 800-306-1990, 800-306-1990. We'll chat about solutions for you. That's what we're always looking for, different ways. And that's why I go out and find different programs that we really believe will end up helping you in the long run. Just giving you an idea there. Let's see. What are we going to do? Let's do a Borrow Smart, brought to you by rsrvaloans.com. rsrvaloans.com. Throw a curveball there at Josh. rsrvaloans.com. What do VA home loans cover? Well, we're going to delve into an important topic that many of our nation's heroes are often curious about. What do VA home loans cover? It's high time we shed some light on this. Point number one first. Let's talk about what is a VA home loan. In simple terms, a VA home loan is a program provided by the U.S. Department of Veterans Affairs to help veterans and active duty military members secure a home loan without a down payment or without excellent credit. This incredible program was designed specifically with our brave servicemen and women in mind to assist them in realizing their dreams of home ownership. Second key aspect we must discuss is, what can a VA home loan be used for? Here's where it gets exciting, my friends. A VA home loan can be used for a variety of purposes. This includes buying, building, or improving a home, refinancing an existing home loan, and even buying a manufactured home or lot. The versatility of the VA home loan program makes it an excellent option for veterans who are looking to make a move in the housing market. Lastly, third point, let's discuss the VA home loan benefits. Apart from the no down payment requirement, the VA home loan comes with additional benefits that make it stand out. For instance, it does not require private mortgage insurance, which is typically mandatory for loans with less than 20% down. Moreover, it often offers competitive interest rates and flexible qualification standards, making it more accessible to those who have had the honor of serving our country. And I'm looking right now, loans locked yesterday. Looks to me like, of all of the loans locked, all the 30-year loans that are government related, that'd be conforming. Well, the jumbo isn't government related, but the 30-year conforming FHA, VA, USDA, every one of them, VA is the lowest interest rate on every one of those that locked yesterday on 30-year programs. So it is a great loan. Bottom line, in closing, it's evident the VA home loans offer substantial benefits to our veterans and active military personnel, making the path to home ownership less cumbersome. Actually costs you less to get into a VA loan or into owning your own home with that VA loan than leasing. For more information about how you can take advantage of these benefits, visit rsrvaloans.com, rsrvaloans.com. And remember, we at Ron Siegel Radio are always here to assist with your home loan needs and provide insights to help you make well-informed decisions. I hope you found this enlightening. If you did, make sure to share it with your veteran friends and make sure to subscribe to our channel. That is the Borrow Smart segment, brought to you by rsrvaloans.com, rsrvaloans.com. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, home buyers are still more active than usual. How cash-only spending affects your FICO score, all that and more. Reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender. Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@ronsiegelradio.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report, it's wrong. What are you doing about it? Credit Sanitizer has these solutions. Go there, get registered. We'll connect you with our friends right over there at Blue Water Credit. They do a great job with our friends with all of our friends and listeners. Blue Water Credit, part of the RSR, CreditSanitizer.com solution. How cash-only spending affects your FICO score is our subject today. As interest rates rise and more businesses charge a fee for using credit cards, more people are opting to tuck their credit cards away and embrace a cash-only lifestyle. Returning to cash does have some appeal. Many people find that using cash makes it easier to stick to a budget and steer clear of debt. Relying on cash can also save money since it eliminates credit card interest and allows you to avoid credit card convenience fees. However, abandoning credit cards means trading the perks that come along with using a credit card. For instance, you miss the opportunity to earn rewards and forego protections like extended warranty coverage and purchase protection. Opting out of credit can impact your FICO score and progress toward reaching your financial goals. Here are 2 key ways that this could impact your FICO score. You may not have a FICO score since cash payments aren't included in your credit report, which holds the information used to calculate your FICO score. Cash-only spending does not impact your credit. Your credit report needs at least one credit account that's been open and active in the past 6 months to generate a FICO score. It's possible to experience a loss of scoreability if your credit file becomes stale, meaning your accounts aren't updated for several months. Younger consumers in particular may be impacted by cash-only spending. In a recent FICO survey, 29% of Gen Z answered that they don't have a credit score or don't know if they have one, compared to just 8% of borrowers. Without a scorable credit history, it's challenging to access credit-based products and services since businesses often rely on credit information to approve applications and set pricing. That means you could face roadblocks when you're buying a house or car, renting an apartment, or even purchasing a cell phone on an installment plan. Note that having no FICO score at all is different from having bad credit, which is the result of mishandling credit accounts. Likewise, you won't have a 0 FICO score since scores range from 300 to 850. You simply won't have a score at all. Your FICO score may not be high enough to get approved, even if you only have 1 or 2 accounts listed on your credit report, like a student loan or being an authorized user. Your FICO score might not meet the minimum requirements set by certain lenders. Your FICO scores take into account the types of credit you have, your mix of credit, and it contributes to 10% of your score. Showing that you can manage different types of credit helps increase your FICO score. This means having both revolving credit and installment loans with a history of on-time payments. Sticking to cash can make you a responsible spender, but you don't necessarily show that you're a responsible borrower because so many life choices involve your credit history. Finding a responsible balance between cash and credit is important to responsibly building credit. MyFICO.com, great source for finding out what your credit score is. MyFICO.com. Go right over there and get your credit score. Now, be aware that that is a big departure from what folks like Dave Ramsey say. And I understand there's a lot of Ramsey followers out there, but my point is maybe it's not exactly realistic. Give you an example. I've got to go out of town at the end of the month. I'm renting a car. If I don't have a credit card, I got a problem. Just throwing that out there for you. They're going to want to see a credit card. If I use a debit card, they're going to put a massive hold on my account. And I don't really like giving people access to my account, so I don't like using the debit card in the first place. So just throw that out there for you. Be careful. That is Your Credit Matters, brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? CreditSanitizer.com. And we've got a real-time real estate segment brought to you by RSRmoney.com. RSRmoney.com. Home buyers are still more active than usual. Even though the housing market is no longer experiencing the frenzy that was so characteristic of the last couple of years, it doesn't mean today's market is at a standstill. In actuality, buyer traffic is still strong today. Showing index is a measure of how much buyers are touring homes. We're going to show you a graph to illustrate buyer activity trends over time to help put today into the proper perspective. And just remember, when you look at the graph that we've got on, if you're watching us on RonSiegelRadio.tv, any of our socials with ABC, News and Talk, AM 1490 video feed, 2021, 2022, we call those the unicorn years. It shows there's seasonality in real estate. If you look at the last normal years in the market, that would be on the chart we're showing from 2017 through 2020. That's what we're showing as the last normal years. It's in gray. There was a consistent pattern as buyer activity peaked in the first half of the year during the peak home buying season in the spring and slowed as each year came to a close. When the pandemic hit in March of 2020, that trend was disrupted as the market responded to the resulting uncertainty. That's shown in blue in the middle. From there, we entered the unicorn years. That's shown in pink on the graph. This is when mortgage rates were record low and buyer demand was sky high. Similar seasonal trends still existed even during that time, just at much higher levels. Now let's look at 2023. Traffic is down from the previous month, and it's also lower than the peaks we saw in the unicorn years. But what's happening isn't a steep drop-off in demand. It's a slow return toward more seasonal, more normal seasonality, as the showing time report explains. Quote, showing traffic declined about 10% in May. This follows a typical seasonal pattern disrupted by the pandemic, but now beginning to return, unquote. And to highlight this isn't a drastic decline, let's zoom in. And we've got another graph using just the May data for the last 5 years. It shows just how strong buyer demand is. Traffic remains above pre-pandemic limits or levels, not as high as the unicorn years, well, 2021. It's higher than 2022. Buyers are still out there touring homes. They're more active than they were in May 2022, with sticker shock over higher mortgage rates started to set in, and certainly more than they were in the last normal year. So remember, buyer activity is still strong, and it could actually be even stronger if it wasn't constrained by the limited supply of homes for sale. According to the U.S. News, housing markets have cooled slightly, but demand has not disappeared and in many places remains strong, largely due to the shortage of homes on the market, unquote. Bottom line, don't lose sight of just how active the market is today. If your house isn't on the market, it's not getting in front of all those buyers who are looking to make a purchase right now. Let's connect to start the process. Remember, I know that you're worried about selling your house too quickly and not finding a new one. At Geneva, they've got a transition loan that helps with that. If you don't understand the transition loan, basically, you go and get approved, use the equity of your departing property, even though you haven't sold it yet. You're going to get a new loan securing that, and you're going to have that loan will cover the acquisition. So you've got one loan covering two properties. We used to call it, back in 20 years ago, we called it a cross-collateralization loan. So using two properties to collateralize a new loan, and that gives you the ability to buy the new property. And it can be closed very quickly just because our friends at Geneva have their own money that they're lending out. Just throw that out there. It's a transition to help you get in. Then you just use the departing property, the equity there, and get a new loan on the acquisition, and you're ready to get up and running, and you're all set there. That's a real-time real estate segment brought to you by rsrmoney.com. Have you got registered with RSR Money yet? rsrmoney.com. It's going to give you it's going to let you monitor your credit, monitor your bank, monitor your assets. If you put in your own current residence, it'll give you whatever they have, up to 4 different valuations of that property. 3 of them are really good. They also give you Zillow. And it's also going to have about 97% of the properties on the market that are available for sale. They've got those on there as well. rsrmoney.com. Give you a little recap of all the things we've given away today. Got the VA loan program, rsrvaloans.com. rsrvaloans.com. Give you a real tutorial on the VA loans. A lot of different information there. We've done, 15 or 20 workshops on that, I think, Josh. Isn't it about 15 or 20 of them that we've done workshops on the VA loan? You can watch one, watch them all, watch none. Just get the loan if you're a veteran. We appreciate you. We showed you why that 3 or 4% home loan might be killing you. rsr3pctloan.com. rsr3pctloan.com, like 3% loan.com. RSR Sales Max. RSR Sales Max. show you how to sell your property for the most money in the quickest amount of time. rsrsalesmax.com. Not a lot of people understand how to do this the right way. The partners with Ron Siegel Radio, they do. So anywhere in the sound of my voice, we have partners that can help you get the most money for your property. You have to give us a call because your local real estate agent, they may or may not know how to do this stuff. rsrsalesmax.com. And as always, we ask, hit that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money, seal up a lot of people, and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.